Things are pretty good. I don't know what's the market's problem.
They're doing all right. I mean, look, the market itself is really only a few percent off its high. It just seems like the average stock is kind of suffered. And actually, the stuff everybody owned, the Apples of the world, where you kind of couldn't not own it if you're a professional investor, have gotten punished. Look, Apple's 4% of the index. It never was the whole market. And I think what you're seeing here is a little bit more of a defensive cast underneath the surface of the market. Small caps are underperforming. You have these kind of big traditional growth stocks that actually have gotten a bid lately. And I think that's kind of an interesting thing. As the broad macro growth outlook comes into some question, you go to those stocks that actually can grow through other periods.
Now, we have seen sell-offs not only in Apple, but a bunch of the other MOMO stocks or momentum stocks. We were talking just before the show. Obviously, Groupon has gotten hammered. Zynga.
Yep.
You mentioned Priceline, which is sold off. These stocks were, even an IBM, these stocks had a lot of good news priced into them.
They did.
Right.
No, and really, they really were a fairly narrow group of leaders that kind of got hit. Now, it's funny because a lot of people say, well, those are the bellwethers, and when they come for those guys, it means the average stock has no chance. I actually think of it a little bit differently. In December, you had a similar dynamic where you had a series of a handful of bulletproof stocks. Toward the end of the correction is actually when they finally succumb. So I don't know if it really is determinant of what the market's going to do. What it does mean is, you had a lot of air underneath these stocks, and some of it's coming out.
Last summer, very similar feeling going into at least last summer, in which you have the macro versus the earnings. And I sat here with a number of people at the Wall Street Journal, and I was about to look at earnings. Everybody said earnings doesn't matter. Right. It's all macro. It's all macro. It seems that at least the chatter on Wall Street again has gone to this all macro all the time discussion. Is this second time unlucky, or what's going on?
I actually think if it happens again, it's the third time in a row. It actually is April of 2010, April of 2011. So to me, it's Wall Street's muscle memory saying, this is the time of year when you have to all of a sudden, get up at 4 o'clock in the morning and see what European CDS sovereign spreads are doing. And I don't think we're there yet. I'll be honest with you. I think that we're flinching in advance of it. It could erode in that direction. I'm never going to come out here and say central banks are being proactive and they're actually ahead of the curve. I don't think so. But I think the tools are there that you can kind of sift among a Spain versus an Italy and actually have an argument there, as opposed to, cringing for the next potential meltdown.
When will valuation finally matter? And what I mean by that, Mike, is, I always invest for the long term. I look at stocks over multi-year periods. The market doesn't really seem to have much of an interest in doing that.
Right.
And yet you and I could probably pick out a handful of well-known stocks, even in the financial sector, that are trading to heavy discounts by any historic measure, whether it's relative to book value for the financials, or it's stocks like Google, where my wife works, which is trading at very modest multiples. When will valuation matter? And will it ever matter again on Wall Street?
I actually think it does matter. What it matters for is expected returns over a long period of time. So it doesn't necessarily matter in the sense that the market's going to price in, a better long-term expected return today in the form of a higher stock price. Saw some data recently that, if you look at a very long-term trend of earnings and GDP and stock values,
they
fair
match
value,
each other
and
they're
very steady. Whereas the average variation of stock prices around that is something like 20% deviation on an average. So obviously the market kind of does what it will. Now that being said, I don't like combining the entire market into a single stock and saying it's cheap because it's at whatever 14 times.
Sure.
I feel like there's too much going on in there. There's too many beaten down financials offsetting some high flying growth stocks. So I do think that it matters. It just doesn't necessarily matter within the attention span of the average trader.